Okay. Why is that screen not sharing? It's not. Okay. If anyone's watching through YouTube, just let me know if you can hear me okay. I'm pretty sure we go capture it. Yeah, it's all good. Just moving things around a bit. Welcome all. So it may not be the longest session. Hey, Jace and Bruno. Ah, good. As long as you can hear it, because I had it on the wrong. It's this program OBS, a different setting. So if it's coming through clear, if you're getting a problem with the feed, you can change it with settings. Go to quality, and you can just put 720. It'll just sharpen it up, and that'll be on the the bottom right corner. There's a little spinning wheel. All right, so just to make sure I've got everyone. So hopefully we don't have too many issues with just the pushing the data out from my computer over the internet. We've got three things going. So I've got it going to Discord, to TradingView, and to YouTube. And I set all this up this morning, and then realised a bit later on that the Hang Seng was closed. So not too happy there. It was a bit. I knew it yesterday. I forgot all about it. So they've got a bank holiday there, so which means there's no action. From 11 o'clock, there's been no action um, on the Hang Seng. So what we might do, we just recap, obviously the markets, just have a look at what's going on, um, and then maybe just talk through some of the entries from yesterday, especially in the Hang Seng. There was a good setup yesterday. Um, like we've said before, the inside out, sorry, outside in. Yeah, very subdued. I mean, although I didn't expect, this ramp up. There's going to be bargain hunting after this, so that move down last night, end of financial year. They only get off the new financial year, so not the financial year, new quarter off to a bang. Rally back, jump back in, and keep the ball rolling. So it's all stimulus at the moment, which is funny. You see the debate everywhere you read, it was an absolute mess. It's just a shambles, and it's unfortunate. If anyone didn't see the talk I did yesterday, just before it opened, the guy I was talking to, Alio is his name. He's been around the traps for a while. He said he was watching. I didn't watch it. He said it was. You got to turn it off. It was just a bit of a joke. They were just yelling at each other. I think Trump's just a natural bully, likes to bully his way into things and through things. So he said it was a bit of an embarrassment for the country to see the debate between the current leader and the potential new leader. Um, of the strongest country in the world. It's a bit of embarrassment overall, I think. So I never really watched. I watched bits on YouTube, and I think there was personal attacks in there, which was from Trump on his son. That was just that was a cheap shot. That was really really I think it takes a low person to do something like that. Cheap shot at Biden's son. I think he's had drug issues, and he brought it up, and you go, that's not something that needs to be brought up. What's that got to do with his political stance or anything? To have a go at that was ridiculous. So yeah, he's embarrassed himself and he embarrassed the country and he's embarrassed his leadership. I think, and I don't think Biden did too well either. So he was a bit probably a bit more subdued, but still a bit of a joke. Time, but only found old episodes. Okay, you'll see it if you go on there now. It's up there now, but I'll get it. I've got to find a live link then. I'll find out from you. So for next time, I'm not sure when I'm talking next time, but I think it's on Monday to Wednesday at 12 o'clock till 1. So that's 1 hour. They're talking about shares. Basically, it's just Aussie based shares. So it's not, your index stuff and everything else we like trading. But, it's good. If you're trading into shares, it's good to listen to. You get some good talkers on there, some good analysts. There's a few tech guys like myself that'll get on there. And there's a few others that you'll know. I can't remember their names, but there's some sort of well-known technical analysts or technical traders who'll jump on there occasionally too. So they just sort of mix it up. Um, Now, what was I saying? So this is nothing happened on this morning. So we've got the bounce back. like I said, I didn't expect that to come through, bounce back from there. So it could be just the end of month, which, yeah. So I think end of month, hallmarks, they're all trying to lock in their gains. They're all trying to fiddle around with their numbers to lock in their profits, and portfolios are reassessing risk and maybe adding risk, maybe taking some off at the end of month just to rebalance. And a lot of this it's just natural argy bargy that happens in your bigger portfolios, your funds, they're mucking around, manipulating indices, manipulating closes, all that sort of stuff, just mucking around it. So um, yeah, it could have been attributed to the bigger sell-off. I think a lot of it was to do with the uncertainty of U.S. elections, which I don't think is a big thing at the moment. I think either way, and I think, well, it probably is. If you're looking at Trump getting back in, I don't feel that he wants stimulus, or at least he doesn't want a lot of stimulus, um, because he's been, if he wanted it and if he wanted to keep the ball rolling, they would have already done something, with $2 trillion or something, bumped it up, and all of a sudden you got all markets in the world, all new all-time highs, extended valuations, all that sort of stuff. But it doesn't seem like he wants to. He's playing like he did with China, and negotiations keep going back and forward because he doesn't really want to do anything. He wants to draw it out or something like that. So I don't think he's keen to draw it out. Whereas Democrats want to look good by saying we've got a $2.2 trillion package. It's their fault that it's the Republicans that are holding off. They're mucking around. Um, but either way, I think both sides now coming into the elections are talking it up. We're getting closer, and that was why the market bumped up on the open. Sort of brushed aside any of that rubbish through the debate, that uncertainty, and the talk of, and because what I think everyone's expecting is not to come through, more stimulus potentially not to come through before elections, but the talk last night from both sides, I think it's Pelosi and I'll call him Munchkin, Nugent, um, about stimulus, saying it's going in the right direction, this, that, and the other, and the market ran straight up from the open. And then later on, McConnell, I don't know what he's got to do with it, but he's in the Parliament or he's in Congress, said they're still far apart, which saw a sell-off. The market started rolling over again. So I firmly believe that they're poles apart on coming to an agreement, but they'll talk it up. So what you can expect, if I'm right, is just that talk it up to support the market, but don't come to an agreement. So the market's going to come to the point where they're going to get a bit frustrated and go, well, it was coming, it's coming, it's coming, but it's not coming. And sure enough, they keep ramping the prices up, keep ramping the market up. It's extended, so they're already factoring in further stimulus. They're probably factoring in 2.2 trillion. Now, even if it does come about, I don't think it'll be that. I think it'll be a lot lower. So there's going to be some sort of adjustment, um, you would think, into the market. Now, if it's a good package, you'd expect the US dollar, and the US dollar's come down through talk. So it was above 94. It's back. The index is back below 94 now. It's 93.86. So I think when I was doing the talk yesterday, it was around the same levels, 93.82, 83.84 on the index. It hasn't really moved much from basically this time yesterday. It didn't really move much through the talk, so it's not really getting affected by the debate. But there is that. Um, so let me just get one thing up. There is that. Intraday trading. Here we go. Yeah, you see on daily coming in later. So I'm just reading a few comments. Yeah, yeah. No, Vin, if you're listening, um, it looks like what spike later stimulus leaks. Yeah, trading money. Yeah, exactly. Low volume sell yesterday, so good for scalping. All right, so where we got? How you going there, Sharif? In trading me? Yeah, no, exactly, Jason. It's not got to do with it. It's just got to do with kicking the can down the road with stimulus, and they'll keep. I think the market is like it's got one way at this moment. As long as they're talking up stimulus, that's as good as stimulus. And it's probably better because no one knows how much it's going to be. As long as they're talking up, they'll keep pumping the market. People can only buy at the moment. They're not going to sell. They've been burnt too many times selling. Um, so we'll just see where we can get it, how high we can get it to from here, kind of attitude. Um, the SPY is just popping. SPY's decided to kick on with it, so you don't be surprised if we have a bloody big day today on the SPY. I don't really want to buy it here, but it's just broken through that level where that's a stop run now. It's looking pretty strong for a stop run. The stop run's not going to be too many points, maybe just flicked up. Just keeps driving higher, which it looks like it's going to. You sort of got levels on the SPY up at 96. It's a big effort. We're going to make back basically the losses from yesterday. I find that hard to believe, but nothing is off the cards with the ASX and the SPY. The way it can get ramped and bullied around. Um, yeah, so like I was saying with stimulus, it's not about. Well, I don't believe it's about the stimulus package as such. It's about talking up further stimulus because everyone equates to previous stimulus means a bull run continues, US dollar lower, all the sorts of things. So they're extrapolating what happened before into what is going to happen this time around with stimulus. Now, it's probably going to happen prior to that. The market will just keep getting ramped. As long as they're talking up, you don't want to see headlines where, they're poles apart, they're not going to come to an agreement, bang, it'll drop like a stone. Or it's going to be maybe 1 trillion as opposed to, half of 500 billion, 800 billion as opposed to 2.2, which Democrats are proposing. Now, they can propose that probably because they know it's not going to get through. I think they can vote when it goes to the upper house, lower house. Don't understand it all. But where the Republicans have got control, it won't get voted through. So they can sort of pump it up as much as they want to look good into elections. And Trump's probably sitting there going, well, I don't want to pump it up because I'm going to get caught out with, just flooding the markets with dollars. And, this market's going to crash eventually because the valuations are way too high. And then you're going to get when you keep flooding the market and the market keeps getting buoyed, low interest rates and all that, that environment's going to create inflation maybe sooner rather than later, which is going to mean raising rates is going to kill this boom that the market's got at the moment. So yeah, I think it's about they probably come to some sort of agreement. Let's just talk it up into elections and then go from there. So I don't think they're going to come to terms on anything soon. I think Nugent or Congress, the Trump's little gang want around a 1.1 trillion or so, half of what the Democrats are aiming for. So, there's going to be some massive swings between the two, or concessions between the two groups before they come to agreement. I can't see that happening anytime soon. So, in saying all that, the market either way, the Dow is bullish. That little spike. So that was this little spike here. I don't know if there's news. It's just popped out on the back of nothing. Um, Yeah, all markets just popped. They've just popped. Why have they just popped for? Anyone seen any news? It might have just triggered a bit of a jump across the board. There'd be probably more bloody headlines. Trump's tweeting something, I'm guessing, about, yeah, I mean, for that to happen when you got the spy. So that's what are we going to, Nikkei's just jumped 50 points. The Dow's jumped 93, 60 points. There's a good spike, and look at the SPY has just taken off 55 up to 78 on the back of that kind of rally, that jump. If you're buying up here, in my opinion, you're nuts. If you're intraday trading, you're buying up here, so, but it's still going. It's getting ramped. It's not just it's not just your typical buying, which is a bit unusual. Just look at the index. ASX just ramped up as well. It's just jumped. I don't have a good news alert. It's always slow. If anyone's got any headlines that they may have seen that's given a bit of a kick, we'll see. So let's just go back to just see if anything's that's not what I want. If anything's actually happening. Okay. Let's see, I've got some Reuters here. Dollar index is just something's happened because the dollar index has just popped down. You don't get And if it's going to pop down, I don't think it's in reaction to the markets. That's the one sort of leading it around at the moment. Dollar index is about 85 minutes, not a big move, but it's just a bit of a pop lower. Currencies probably popped up. Yep, Aussie's up. There you go. So don't be surprised if there's been a headline on stimulus again. Now there was something. Uh, yeah, I think it's all up and running. Bruno, I think it's Nikkei's up. Hang Seng's not. What was it? So there was something that was going to happen. It was 11 o'clock our time, or 9 o'clock. So maybe they've had something. It's probably a news headline. Don't be surprised. Let's just see if Reuters. See if something's popped up on Reuters at the moment. Asian markets. Technical glitch. Yeah, that's up and running by the looks of it. It's nothing at the moment. It's very slow to react anyway. No, no. All right. I'm just guessing this. No, I'm not getting anything either. Okay, so I'm not seeing anything yet. If you do see something, just pop into the chat. We'll see. I reckon, Jason. I reckon that's the most likely. No one's holding them back, so it's a free reign to just rally. All right, so let's just go over. No, I don't see any trade here. To be honest, I think you could have just bought on those candles. I don't like that kind of move. I think that could be a flush and it keeps going. You just sort of wonder you want to buy on the first pullback. SPY doesn't have a pullback. The 1 minute chart, you've got this spike up on the. So I'm still looking for potential weakness around this resistance zone at 23,375. Might be a bit of a spike, and when people start reading more into the headlines, they might see that there still is, there's still nothing happening. I wouldn't be surprised if it's a stimulus headline saying, U.S. Treasury Secretary Mitchell, we have reached agreement on direct payments to Americans. So that's not their full stimulus package. It might just be something, you know. Okay, so it's something to do with the stimulus by the looks of it. It's just whether or not that means anything. They'll come out and people will be going, well, what does that mean? We've reached agreement that it's going to happen in 3 months, or we're going to bump it up by a little bit, or whatever it is. So there's always that. Very cunning on Trumpy's side. They use the headlines to manipulate markets very well. I mean, they all do it. I think they're all starting to do it a bit now. Use headlines, they're ramping it up there. If we talked about market manipulation or insider trading, all that sort of stuff is a big thing, yet they can do it on a big basis, can't you? With governments, Trump's more than allowed to get up there, talk up different things to buoy the market, which he's done many times in the past. If you get an ASX company comes out and starts talking up, talking rubbish to buoy they'll get in trouble. They'll get a speeding ticket or they'll get fines. There'll be all sorts of hoo-ha. So I don't see the Dow's, it's popped back up in the resistance. I'm on a 5 minute charts here. There's been an offer zone up here. So just because we popped doesn't mean it's back into the offer zone. So it could find some pressure again. I think the level would be, it's a bit of a flush, could be, if we start to head back down to these lows at 862, back down here, then I would expect a bit of a move back down again. So unfortunately, I'm not seeing anything I want to be taking part in. I don't like I said, I think this it's made a little on the Nikkei, little inside level in here, which, if you're going to trade long off that, fine, but I wouldn't be trading up here. I'd be wanting to trade a pullback. I want to see if this can stick, whoops, something like that, then it's worth seeing if it can ramp up. As long as that is getting a bit of a run on too. If we start edging higher, holding higher lows, just minor higher lows at a 5, then this could be pushing up through 029, which is another 50, 60, 70 points away. Even just at the top end of that range above 28,000 is potentially 100 point rally on the Dow, which would mean that any pullback on the Nikkei that gets soaked up, it's sticking to this longer term trend up. So if it gets soaked up in here at a higher level off this double bottom here, essentially minor double bottom, you can even say there's a decent bid zone through there as well, then great. And that's what we could be looking for, that sort of move back up and see if we can pressure these highs. Even if it just gets up and retests these highs at, say, the 80 mark from current levels, that's it's a 60-point rally. So you can take out 20, 30, 40 on that, great. But we just have to wait and see. I want to see that pullback. I want to see what happens on this first pullback. If it starts to get soaked, because the momentum, you can see that it's still rolling, there's a potential this heads straight down and through. So if you're going to go long, you'll want to go off that shoulder, because the shoulder is going to show that buyers are happy to step in at higher levels and willing to support it and trying to push it higher. And especially, it means that trend has started to flatten out a bit. It needs to flatten out. So for me, this kind of action, for it to just ramp up from here, it's a big ask. I mean, it can happen. But it's not something where you want to buy into a potentially stretched market on the upside. You want to see something like this when see how it pops above the MAs, it consolidates through here, that's prime. And then the MAs start to lift and you're buying back when it's rising. But at the moment, the 20 and the 50 are down. So you're sort of against the recent action, especially this down move. And it needs to sort of flatten out. So if you've got all these, it starts to chop around here for a while, give it half an hour potentially, and starts to hold, then a break to the upside could mean that you're getting to move back up to here. So that's what I'd be looking for there. SPY momentum trading is kind of a tough gig, because it can, like that, you get this chop and then bang, up we go. And that's obviously been driven by the news, and the market's really kicked off. 83 we're up at the moment, and not a lot of love around for the smaller ones. We've got the CCA. Yeah, I mean, we haven't got many positions anyway. It's just that tougher. There's not a lot of stocks that look like they want to go. When they look like they're going to go, you get a couple of down days, they all get flushed out again. And not all of them. There's some that are going. It's these smaller cap ones that can be ramped by a bit of euphoria. And a lot of Twitter traders talking it up a lot, which leads a lot of these small caps to run hard and kick on. So they're hard to get onto. It's just kind of, taking the plunge and diving into a lot of these little ones. And the little ones I've got are not moving, which is typical. All right, so the CF SPY, I mean, this kind of heavy action, you might be looking for an outside in type of trade off this resistance at 58.96, but the SPY is notorious for doing that and jamming through. You get long, you get squashed, you get short, you get squashed. And then we'll see if we can potentially get a bit of a fade into the close. But I wouldn't be looking at anything long on that on the SPY. Again, Nikkei, want to see if that pulls back. So it's doing nothing. It's on a 5-minute chart. So that the Dow seems to be holding up here. Maybe don't be surprised if the Dow gets ramped up into the open. This news would flow into Europe. Europe lagged last night. So Europe, I think it was around midnight or thereabouts, Europe started backing off where the US was still going up. So they were still going up. They put on more gains. So Europe backed off the last probably hour and a half of their session. I think they closed around the 1 or thereabouts. So they backed off there into the close. Yet US was still going higher. Roughly at the time they might have peaked out. The US might have peaked out before they get a bit of a sell-off. So I think Europe was just a bit, uncertain about holding those levels and sold off. They ended up lower. So they might be trying to make up, the fact that they missed out on those gains in essence. Um, the indices in Europe, and then you got this headline just thrown in the mix at the moment, which is well timed coming into the Europe Open. You might get a solid open in Europe, leading to the Dow, pressing higher, and then potentially getting knocked down on the Open. I mean, who knows? At the moment, like we're saying, anything to do with stimulus, it doesn't need to be anything legit. It could just be talking it up, which is going to drive the markets higher and higher each time. When they finally come to a deal, I'd expect a bit of a sell-off because I don't think it's going to be what everyone wants, what everyone expects. While I'm ranting and raving, do you want to go over just some entries? We'll just talk through some entries that we've been looking at on the Hang Seng. Might be worthwhile. Don't remember this action is really overnight action, so I'll be focusing in on the ones that we'll be trading that we would, yesterday. That was about the time that was just at the end of the talk when it really started kicking off. So I'll go through some, and I'll get up where is it? I'm not there. I'll get this up here. One minute. Let's get a 1 minute chart. So I have to reset a program. So what I'll do is just go through the zones where, of course it's in hindsight, but the zones that were looking good on the 5 and reasonings behind why it's holding up, and then on the 1. All right, just gonna keep an eye on the Nikkei because I've got that off another screen. Anyone got any trades on at the moment? Vin, you can hear me? So Vin, if you don't know, I mean, if you're listening in, feel free to ask any question, mate. And I know you've been chatting in you can type in the trading channel, the Intraday Trading channel. You should be able to hear it through Braden's Lair. You join in. All right, so this was the 5 minute chart from yesterday, and we'll just get up the 1 minute chart. I might be flicking around from one to the other a bit, but we'll see how we go. That's not the action we're focusing on. We're focusing in on these two. Okay. So you'll see areas we're looking at. So this here, you'll see the open was, we'll mark that up. Open was this candle. You're generally picking the biggest candle, ramping up on the open. But it was off. I think this level in here was roughly the close. I think I marked it up as the close. What was it? 5 o'clock. So actually it was in here. So we'll just go mark this up again. Say it's about there. Right. So you can see the actual open yesterday. You can see it was pretty much where the night session closed and it ramped up. Okay, so what you've got is a retest of that zone, and just on the open, I think that was after, so at 11:30, we got this bit of a sell-off. So the futures flushed out a lot of dragged in a few sellers, dragged in a few buyers, and then flushed them back out just when the index itself was starting to open. So we've got a bit of a pump up in the open, and then once the index itself opens at 11:30, a bit of a sell-off, probably a gap down. The market caught a few buyers off guard, squeezing back out. So then it gapped back down to where it closed at night. The futures closed at night. Then it started to hold. So we've got, from here, you've got the 20 and the 50 are up. I think the futures were the same at that stage because we've got to remember that the CFDs takes into account this previous data as well, which was, let's just actually see. just for argument's sake. Here we go. Yep. So 20 and the 50 are up. Well, the 20 and the 50 are up. They would be up if you'd see them, but that was the same zone on the CFD. Okay, so you've got the market holding in here after this bit of a flush lower. So you've got the index, which is now open. It's been open for about 10 minutes or 15 minutes. Once you start getting these, this red candle, another green candle in here. And you can see it started to bounce off the 20 and the 50, starting to hold. So really, what I like to do, I mean, not so much on the 5 as such, but match it off with the 1. What's happening in the 1? And a lot of my triggers will be coming from a break back above the hull. So you want to be above the hull, the HMA moving average, whole moving average, on the above for buy, below for sells. But you want the 20 and the 50, so the general direction or momentum of the market, or bias of the market, which is the 20 above the 50 EMAs. So if they're above here, you're generally going to be buying. You're going to be looking to potential break, back above. You want to close above. So this green candle, I think, closed smack on it. If you're trading that just off the 5-minute chart, you buy the break of that candle, which you'll see is basically here. With your stop can go below. Now, I don't like doing that as such. I like using the 1-minute chart to refine those entries. Not sure everyone else trades it. There's different styles, but this is what the way I'm trying to trade. So I'm looking for expansion, contraction, back into expansion again. That's sort of ideal. I'm trying to trade with expansion in any market. And, if you can anticipate it right, you can get some really good expansion. But that's off your key price action, off your key levels. But that's when I talk about shoulders, this kind of thing's a shoulder to the upside. You've come off this level here, the support zone is held. I know it's only on CFDs. It was a bit of a bid zone before. The market's popped up. It wasn't really tested again on the futures. I think, where was that futures close? Futures close was here, was it? Around about here. So I'll just draw that up to make sure I know what's going on. So that was the close of the futures. Markets retested that close. All this action is just CFDs after hours action, so it's not futures action. Retested it, big flush up. So that's dragged in a few more buyers. Put pressure on any sellers that haven't got out from this previous rundown. But I'm assuming, you really should have been closed out by then. The trend is up. It's still looking for, your overall trend is up. So anyone that's buying, God, everything's getting delayed. Sorry about that. It's got to do with all the action. My CPU's struggling, I think. So yeah, trend is up. That flush up has really put a few buyers just on high alert. You got this pullback. They start to soak it back in here, soak it back up. Any sort of selling's come in and it start to lift. So we're trying to buy, like I said, into expansion. You got trend up, expanded higher. That's first pullback. What's happened on the first pullback? We start to get that lift again. MAs are up. Everything's playing into quite nicely on the upside here. If you're looking at, so this is different to this one. Okay, so basically at this stage here, if you're looking at the MAs, for a sell, you'll be looking for a sell here. Why? Because you've still got the MAs up, you're looking for that break back above the hull. But at this stage, we'll talk about this in a different. If you just look at this action in here before we start to break down, is probably similar to this action in here before we start to rally. So what is different? This you're going inside out. This you're going outside in. So you've already expanded, okay, and you're quite a way away from the MAs. So the outcome is no longer unknown, okay. So if you're looking to, ideally, Vin, yeah, mate, I just saw that LYC. Where is it now? It's probably at 240 something. Let me just have a quick look. No, I don't have it here. LYC, bloody thing. So yeah, these flushes, they're designed to take people in and out of the market, chop them in and out. Sometimes stops are just not worth it, but I'll never trade without one, I can tell you that. Okay, let's get back to this. So is this making sense? I know Bob, you've probably listened away. Anyone else in if you're on TradingView, yes, you're right. So I just saw your comment. Is it KLHC? Just saw your comment. So weak US dollar is sort of the thing that's driving these markets around. You get a weakness into the US dollar, no sudden. No worries, mate. So in this, what I'm talking about here is mainly index based, but the trading style that we use, or what I'm looking for with price action, just so you know, I apply it a lot to forex. We apply it to shares. Probably not as hard to shares, but if you can apply it to um, your levels and your way you're trading to any market, because you're looking for weakness, strength, and like I was just saying, you're looking for expansion, contraction. In shares, you just don't really, you're not really shorting into it, but you're looking for that area where you're going to get expansion. We're looking to buy or sell, sell or buy when the outcome is unknown. You're not trying to look at this and go, okay, this pullback, I'll buy into that because now I've got more confidence. Basically, by the time you get more confidence into the move, you've got more confirmation. Everyone else has too, and that's probably not where your money's going to be made. Maybe in shares, it's a bit easier because you don't get too much mucking around. But in your currencies, by the time you've got confirmation here, the move's probably underway. By the time it's up here, it's underway, and there's a chance that you come into this high, it fails. So to buy earlier, and you got that expansion, you're looking to buy an expansion. Now, if it fails here, it's a different story. If you buy on that break there, for example, there's no reason to say it's just not a flush. But if you're buying in the unknown, because that is more of the known. Does that make sense? So by the time you take it up here, you've got a couple of good green candles. It's pretty clear that the market's rallying. So if you buy on that break there, one, where's your stop going to be? Technically, or from a price action perspective, it should be below this high low, and that's a massive stop on the Hang Seng. So if you buy on that break there, you're buying more in the known, not in the unknown, and there's a good chance if that, not all the time. I mean, this time it's paid out, okay, but a lot of the times that could just be a flush of the highs, finishes below, you get squeezed out because you're buying in the known, not the unknown. Now it's harder in these areas, but the payouts are better and the risk is smaller. But what you have to know is your price action. I mean, it's not easy either. It can be tough work. But if you are putting a lot of effort into knowing the price action, getting a bit of a bias for the session, your MAs, however you trade, but your key levels, you're watching your key levels and you're watching price action. So if you're sitting here watching this, then you're expecting a sell-off, potentially something like this. You got the below the hull, because I'm saying about, okay, you sell below, buy above. Okay, so you're looking at this going, it's a sell, potential sell. So if you're looking at that, expecting it to come down, it's not. You've got to be wary. You've got to be ready to change your bias. You've got to be ready to go, okay, if I'm wrong, or if I have sold it for whatever reason, um, where's your sell? You probably wouldn't wait for a breakdown to sell it. But if you had sold it, you've got to be wary that what are you going to do if you're wrong? Okay, if you hadn't sold it and you're waiting for a sell, but your mindset's looking for a sell, you've got to be ready to flip if you're wrong. So in these areas, it's going to be harder, but if you can know what you're looking for and try to keep an open mind when these areas are playing out. So, okay, like I said, if you're waiting for a sell and it doesn't work out, you got this green candle, it closed up on the hull. Okay, that's kind of strength. Now, if it breaks the high of that candle, there's a good chance that I should be long, because that means it's starting to go higher from here. It's not just a flush, and we're going to drive back below. Because a lot of the times you'll get on the hull, they'll sort of pop up and come back below, pop up, come back below, something like that. For example, well, it's probably not a good one. Something like this candle, back at the hull, it opens and goes down. So you want to really see the second candle starts to, it's going to open down here. It's flushed down. It starts to lift sometime during that candle. Then for me, I'll be looking to buy that if I'm trading purely off the 5-minute chart. So let's just go off the one. And what I also like, the momentum is up. It's above, the MACD is above the zero. Momentum, you can see that is up. And I like these sort of pushes from the zero line, like this. You come back to the zero line, it rolls back down again. This didn't carry on, but a lot of the times when it's negative and it comes back, you're looking for that move down, or you're looking for a zone to sell or buy off. So when it sort of popped above, you got the pull back to the zero, and momentum starts to lift again. It's generally a good zone. It's generally a good indication where, okay, depending on the price action, you should be trading it, or you should, in or out, if that makes sense. So this here, yeah, buy. We've got that buy opportunity there. So just go to which is all in here, so you can see on the one, it's a bit of a different, it's a different look. You still got this one. It's trying to go below. The MAs were trying to roll down. It was trying to go, it just wasn't getting there. And so all this price action here is a bit of a mess. So really, you probably shouldn't have been trading that. On the upside, I don't think I would have. Look, I mean, if you got in there, it's probably fair enough. Your stops below, you probably held on, maybe got squeezed out. This is the area once you got it pushed above, that pull back to the MAs. That's your first pullback on the one, and then that break back above. You could take that entry through there. Your stop is, you can see just below um, this low, and what's that? 0.01 down to, so it's a 40-point stop. Yeah, a 40-point stop. It didn't get come into pressure anyway, but a 40-point stop, that was well within your risk, or my risk tolerance anyway. And then you get the market heading higher. So if you couple that, what's that candle? 1207. What can that kick off? Okay, that's that candle there, and you can see off the one, that was a prime entry. Okay, long. You've got expansion. You've got the 20 above the 50 on the exponential, so that's great. Pull back to the MAs are good. It starts to break up again. It's back above the hole. This move may have flushed a few people. The push below, straight back up. So if you can hold, what I'd like to do ultimately is try to hold these moves, because I find I'm getting caught a few. I take a profit a bit too early, and then you've got a bigger move. I'll show you one that's from the other day. I think we had a session when, just when I turned it off, I went short again, and I made some money, but I got flushed on a kind of move like that. It sort of went, it was on the short side, so it went back above the hole, but as soon as it closed just above it, straight back down again, or it was closed right at it. So I'm looking for a serious close on this respect. If you want to get out of your long, it's closed here on this red candle, closed below. I'll be looking for, so give it a bit of room. So if it closes below and starts to go lower on the second candle, then yeah, you could bail, because that could just be a pop. It's starting to go back down again, and then you reassess it. But instead, it's opened and gone straight back up, finished up, back at the whole moving average, and then the next one straight above, finished above. So all this move up here, you could have rode it all the way back up, potentially until about here, where it might have squeezed you out, or or whatever. Whether you took some partials there and kept it going, but you're looking for this zone, potentially up to this zone. So you might have held it through here. You might have taken a partial up here, just depending. But I would have generally been out potentially when it's closed below. You might look at it. You've got this level closed, traded at low. So all this candle, maybe you're giving it a bit of room. You've got a few points that managed to hang in. Then we've got this lift back above, and we're pushing back on higher again. But either way, if you held it through here, say you closed it around 645 from an entry around 5, that's a 100-point rally. So you've got it. In all honesty, I probably would have closed it there, been up over 100 points on that little pop. To me, I'm happy to take it and reassess it. If you jump back in long, so be it. You jump back in long, because everything's still setting up 20 above the 50. You're a bit expanded up here. So that's why you get these sort of moves here. There's a bit of profit taking, but the run still, kicks on a bit longer. Is that great? Yeah, not holding long. So I'll show you. I think it might have been you, Jason, I spoke to. I messaged on Friday, I think it was. Friday or Thursday. I can't quite remember. I think it might have been Thursday. But we'll go back to that move. So yeah, that was that run up, and it's, you got every reason. So we just explained through. If you go back to the 5, and that's where I think we marked up another level. So there was a level up here that you could have, if you were trying to run it, bid to offer. That's, looking back at the 5. So if you look at all this chop around at the 1, trying to stay in here, if you're trying to go off the 1 for a bigger move off the 5, because you're looking at your first port of call is up at 55.93, which is probably, look, you've blasted through it. It's probably here. It's just built that price action is there. It's just made to, flush you out into those highs. So generally, if it happens below, you can look at that and go, people might be looking at it as a lower high, but they're looking off the 1. And that's pretty much what I'd be doing, looking at that level, going, okay, I want to try to stay in. How do I stay in? I could just have a slightly wider stop. I know, or put my stop back at entry just for that initial pump, just say, well, if I get stopped out here, it's a decent pullback. I'm probably wrong. Get stopped out there eventually because I'm quite a ways away from my entry level. Or even putting in a few pips just to make sure you get at least 1 or 2 points gain. Um, but looking at that five, if you're just trading it on the same basis, you got in here, your stops. Once that candle finishes, once you're into this candle, your stops below. Okay, you're going to lock in a loss if it does retrace on you on the five. But what it does, it keeps you in that sort of flush, and everything on that five is starting to expand. You go into expansion here, so your first protocol really, you don't really want to get flushed out below it. You want to be looking to see what happens. It's going to get up to that that previous high, the opening high, that drive up. You're trying to get on to see if you can push up to that high. You're staying in. You're trying not to get flushed out. The 20 is above the 50. It's going up. So that 20 is starting to rally. You can see on the MACD, I use a 20 and a 50 on my MACD just to mirror the 20 and the 50 EMAs. Um, so, so I'm just reading any comments. All good. So we've got that move there. You're trying to stay in. Your stop's a bit wider if you're based off the five. Whereas on the one, you can anticipate if it comes back down through here, that's a decent pullback. And like we always try to say, if you've got a rally, so that's your rally, okay. And if you pull back, I sort of break it into thirds. That's better action if you don't pull back. Now, if you pull back from this high deeper, say 50%, and chop around here, that's not a stronger bull run. So this you would expect if it pulls back in the top third and remains in the top third of this move up, that's a strong market. The deeper it pulls back of the leg up, so this is your leg up. Let me just highlight that. I might be able to, yeah, okay. So that's your leg up there. That's your leg up. That shallow pullback's at the top third. Top third pullback is a good thing. Okay, it's showing strength. If you start to get some high lows there, you're looking for another good expansionary leg higher. The deeper the pullback, if we get to sort of that 50% mark of that leg up, the leg up, you've got more sellers coming in than previously. So it means that the leg up, it may be running out of steam. Now, if you come into sort of that bottom third of that leg, you don't really want to be there. It just means that that's a good leg up. A lot of sellers are happy to come in for whatever reason. You're in the bottom third of that leg. I don't really want to buy. I don't like buying. I like more of a constructive action to show me that, okay, they just let it pull back more and we've got more buyers starting to come in. So I might get something like that. It's in that bottom third. You get this kind of action. You get a flush. Whoop, that's not the action I was talking about. Delete. Let's just go back up. So we might get a bit of a more of a flush and then more of constructive price action where it's starting to buoy. So you can see that price actions, it takes a lot longer, which means that it's happy to support that in the bottom third. And then you look to potentially looking to buy, where your risk is. So, it's got to do a lot of the things you're looking at is the run up. How deep is that pullback to say how strong was that initial run up and is it going to continue? So when it has a shallow pullback, you sort of look at that going, well, look, it's going to be another good run up. Okay. So I don't know what I was saying there. But either way, that's what I'm trying to anticipate. So you got this leg up here. It wasn't really there, was it? I was getting myself, I probably forgot what I was saying now, why I started saying that. Yeah, we'll have a look at that, Vin. So in essence, you're trying to stay in with this five. You're looking for that leg up here. You sort of want to see what happens up at these highs. It blasted through. So by the time it got to those highs, you can see the one it just went straight through. So you really didn't have any reaction there at all. It blasted up. Then the next reaction you got was up a lot higher, somewhere in here. So by that stage, even if you're trading off the five again, you got that expansionary candle. You got that not really an inside candle, but that 5-minute candle was red, obviously. So if you're looking to put your stop, you're falling off the five. Your stop's now below here. You're in profit, but your potential to give up a lot is increasing. But by the time this next candle finishes, you've raised your stop quite a bit, and it never got tagged again, and it never got tagged right up until probably this level. if you're looking to trail it behind the 5 minute candle. So you got the push up on this candle, closes, goes straight back down, tags you on your stop, potentially 717 from, if you got an entry at 510 even, that's over 200 point rally. So that was a good little push higher. Does that make sense? Just, it's really, I guess what it comes down to, I'm trying to take a move on the 5, but I'm trying to refine it on the 1, and hopefully I don't, stuff it all up and get out too early. You know, in here, like I said, if I did get out there, okay, you've given up a bit in hindsight, but you never knew that was going to happen. You've got to look at, what have I got? I've got 100 points on the table. Maybe I take some off and just widen my risk a bit, but still don't widen it too much. Um, how do I widen that? By the time, like I said, by the time this 5 minute candle, this one closes, if you're just raising your stop, you might have it down at 35, for instance. It closes somewhere around 45. Give it 10 extra points, or 5 or 10 extra points. And if it does tag you, there's a good chance we're going to get something like this. There's a couple of good red candles down, and you've got a high up here, but instead it's taken out the high, and then you can just, this candle closes, you raise it slightly, this candle closes, you raise it slightly, you raise it slightly, just off the 5, and try to lock in a bit more. Give it by giving it on the second part, giving it a bit more room to move. So back to the 1, actually. So that pretty much, that sort of pump off. The fact that we drove up into this level at 768 is a good reason why you don't really want, you don't want to leave your stop way down here, or too wide, because you are up into a key level and you're up 200 points. You don't really get many opportunities like that to lock away a couple of 100 points on the Hang Seng easily. So that was that first long. If we start looking at this, so this one, like I said, if you're looking at the 5, that's an inside out. You've got bouncing off the MAs, so you're looking for the opportunity. It's either going to drive down lower, and that for me is a hard trade, because the 20 is above the 50. I don't really want to be selling just because it's below the hull. I'm looking for that 5 minute action. I haven't seen a sell. This is more chop after that, but even here, 20 to 50 is going down, but you're against them. Even though that worked out, I really wouldn't want to be looking at that. You can anticipate that this is an entry here, because you got the push down, chops around 325. You got that sell through here just off the lower higher shoulder, going with this MA. There's a good chance that the 20 is going to roll over if that plays out, but there's also another good chance that it flushes these lows and you get stopped out. Okay, so when you're trading against the major bias of the 20 and the 50, you are risking getting in the wrong area. It's not a solid setup, but they do. I mean, like I said, that does play out okay. You just got to be wary of what's happening on that 5 minute chart, what's happening overall. I mean, who's to know it was going to go from offer all the way back down to the bid zone? So any of that gains was given up basically into the close. So if we now we analyze this second entry, looking at this zone in here, just want to see how long I've been going for. You've got, say, an offer zone. Okay, you can see that it reacted dramatically off that level. So I don't mind that kind of thing. Once it pops back down, it's back below the hull. And then you got this chop around in here. It tries to go again, but it's just getting sold into. So anyone that's bought it up here is now fuel to drive that market lower. Or you've got shorters, so fresh shorters from the sidelines. But either way, you're anticipating that's running out of buyers. To buy up here, to buy new into a break potentially higher. I'm not saying it won't work out, but it's a low probability trade. So if you're buying on the break of that zone there, say that's your entry, you're in here, it breaks up here, you buy it, you're below that hull, okay, you're extended away, that's a low probability setup, and I wouldn't buy that. It could mean, especially the way it's reacted off that level, that solid reaction there, this kind of move and then back up, I think it's more just would be engineered to get a few buyers and then flush them straight back out. So I wouldn't be buying that. I think it's low probability. It's well and truly in the known. You're not in the unknown anymore, and you're sort of against the potential bias down. I mean, it's easy to say that because it is in hindsight, but analysing like that, you go, well, what kind of probability can I add to that? There's going to be times when you see that and it kicks off. You just got to, suck it up and just move on, which is hard to do sometimes. If you had a couple of losses and you see you've been trying to buy it, you get stopped out a couple of times, and you see it kick on hard against the flow of the market. it just goes. You just got to accept it. It's not your day, which can happen. So, hey, Brooke, how are you? So we're just chatting about some entries. I Not necessarily. I like to see sort of. I like the five, but I really do like using the one for refining because when they match up really well. If you get the one has been an absolute basket case and it's a chop, then the five to me is probably going to play out similar. Whereas this action in here doesn't look too bad. That pullback there, which was in this candle, it matched up nicely to the one. It matched up to the one. Sorry, this 5 minute we're pushing above the hull, going with the flow, matched up nicely to that pullback there. So if you're waiting to see something like that, maybe in here's a whole bunch of chop. So if you're trying to trade the one off here, you're sort of asking for trouble, I guess. But that matches up okay because the 5 minute was really not setting up either. So I think together when they work out well. There's going to be times when the one is a basket case, but it's probably a heads up that the fire's turning or the fire's going to be a bit of a mess as well. If that makes sense, Jason. Yeah, no, you're exactly right. The five, better signals. It's a nice signals. That's why I like to trade off them. Um, it is harder to hold your nerve because, like I said, if you were uh, just trading it the way I was saying, if you've got long from here and you're raising your stops, if this candle's closed, you're into this red candle now, and you got stop way back down here. What's that? 61 up to, there's nearly 100 points alone. So trying to hold your stop below there, looking for the bigger move and potential giving up 100, I can't do it. Some people can. I know a guy that gets a lot of stop outs, but he gets on some really big moves because he's constantly going for that bigger move. So if you're going for the bigger move, you can just anticipate you're going to get stopped on some, you're going to give up a lot of times, if that makes sense. So you're going to have something like this, you're up and you get stopped out, it drops 100 points and stops you out. I mean, it's probably better than break even, getting stopped out at break even after being 150 points up. But when you go for those bigger moves, there's going to be more times you're going to get stopped out and you're going to give it up a lot. You're going to get up some solid gains a lot. Whereas if you're trading off the shorter time frames, it doesn't happen quite as much. So saying all that, holding your nerve in that kind of can, it's turned out okay. But if you're trading off the one, potentially you're looking at this, you might be able to tighten it off the one. In essence, if you got your stop, I mean, this is just randomly picking it here. Just let it a bit more room, but you're not willing to get too far back into that expansionary candle. And it's turned out all right. But if you did get stopped out there, at 92, it's better than 20, was it 20, let's say 30, say. It's better than right down here at 50 points lower, 80 points lower. Does that make sense? Yeah. Um, so where was I? So talking about this entry now, so we're just talking about the reasoning behind potential for that, why you wouldn't go long. So why would you go short? You go short because it's reacted. You can see it's a sudden reaction off that level that we marked up. Let me just see if the market's doing anything. I've been getting to talking. I'm probably not anticipating I'll be trading. Actually, I probably won't trade. I'm just looking at that's the Nikkei there. It's not doing anything. The Dow, what's the Dow? Dow's grinding higher, but it's nothing convincing. And the SPY is probably a basket case. So, like I said, if you're selling in there looking for that pullback, it's just turn around and squeeze you out. So looking at this entry here, CH50, what one's that? That's probably, just be careful you're not trading a pure market made CFD. If it's a CFD, that's a China 50, I think it's a Hang Seng, isn't it? Should be chopping people left, right, and center. So that entry there, you know, you can today if you don't think that's going to be a buy, which hopefully I would have been sitting there looking at that going, no, I don't think that's a buy. I don't want to buy in this extended market. I might do just through stupidity, but hopefully I would. I'd talk myself out of it, and I'd be looking at that going, and the CFD. So I thought it's closed. The one on Trade Direct, you can see it's um it's not trading. That's not trading. So that's because the market, the futures are actually closed. I'll check that before I make sure. So they haven't moved. So that's the futures are closed. If the future's not open, there's no market for it to go off. It means it's potentially just a market made. Now, so back to this. Stop moving. Okay, so you've got that there. So if you're not interested in buying because that's an extended move, you're looking for potential um, a move lower off that resistance. I mean, it doesn't mean that it's going to happen. You could get flushed here, then it bounces straight back up. Anything could happen. But what you're looking at is it's rallied 150 to 200 points. 200 points potentially when it's up here. Okay, it's a big move. That's a good move. It really on the 5 hasn't really pulled back. You got this little red candle here. It's been one straight move up. I think that's important too. When you get a straight move up, essentially a straight move up without some sort of pullback, even on the 5, a couple of red candles and then a left, it's extended in my view because what it might do is just drag in some buyers, but then I expect that kind of extended move is fuel. There's a lot of fuel there to get squeezed back out of the action. All right, so if you're looking at that, there you go. Okay, good leg up, had that little pop, pull back, supported, buyers lifted at 200 points from there. There's a lot of fuel to get squeezed out. So what's going to happen? Where are they going to feel the heat? They're going to feel the heat on a break of that low. Okay, and you're looking for you're potentially not looking for a move back down to here, but you're just looking to follow that move down as tight as you can. And if you're following it from the 5, look, you're probably looking at being stopped out somewhere around here at 580 from 660, give or take. So 660 to 580, there's still your 80 points. That's pretty good on the short side. Just looking for that inside out. So sorry, outside in. Outside in with the stretch market, you're looking back to the averages, which is basically your MAs, your 20 and your 50, and you're looking to see what happens around the averages. Now, if you look at that 1 minute chart, so that is the the setup, and what you can refine that. The way I was looking at this yesterday was really that kind of action there. Okay, you got your low here, which is at 12.45. Minor break of this candle here, it could be very aggressive, and you're risking that this is going to touch that low and bounce. But the payout, the risk is quite small. And as it played out, it's played out quite nicely. If you're taking a break of that low, traded it short within this candle, your risk is still roughly in the same spot. So you can take it two different ways. You can take it from that 5 minute candle, and you can probably look at it on the one, just see if you can refine it. So if we go to the 1 minute chart, I hope so, Brooke. A lot of it's very easy after hours, but this is what, even though there's times when I can't trade like this, as in you stuff it up, you make mistakes, all that sort of stuff. If I keep refining the way I do it, what I like to do is keep looking at these entries, whether I took it or not. Why should I take it? Why should I stay out? What am I waiting for? Mark it up, get it imprinted on your head. So next time it gets that little bit easier to recognize when it's happening. Okay, so I think that's by reviewing, that's what you're ultimately trying to do, is trying to get used to seeing it, get used to what are you looking for. What happened last time? You got this off the one, you go that little high, okay, it's starting to expand. I could buy that break because this happened last time. You're recognizing it. You start to recognizing things a bit earlier, if that makes sense. So ultimately, that's what I'm always trying to do, and that's what I think reviewing is very important for. So if we look at 12.45, so that's that low there, that 12.45 candle. It's basically like that. Okay, so if you're looking at that 1 minute chart and you're looking for the short, you've got press down here. Okay, so that's probably that first 5 minute candle. You've got this little bounce. So you've got a little zone. You can see quite clearly it's starting to hold up here. Okay, we press up, failed off there, took out this low, come back and retest it. So by about this time, you can say we call an RTF retest fail. It's a minor double top. You're anticipating some weakness because you're anticipating all these buyers here to get squeezed out. If they see this, can you ask yourself, if you were holding long here and you started to see this, would you get out? Okay, and that's what you got to ask yourself, I guess. I would just go, yep, I would probably get out. 9 times or 8 times out of 10, it's going to go lower. There's going to be times when it's not. You get out and it turns around and bounces on you. So be it. It just happens. But a lot of the times, that kind of weakness off this lower high on the one, after this rejection off a key level, off a major resistance zone, there's going to be buyers here, all the way up here, whether they're late. If they're late into the trend to held through this, they're going to be bailing pretty quick. Then you start stepping back. Pressure on these guys, pressure on these guys. That it just gets the more it moves down, the more pressure on this, and the more it becomes known that it's starting to break down. Okay, so again, in here you're trading the unknown, with the probability that this is the setup that's going to play out, and anticipation they're going to get squeezed. So all these things you're adding together, and that's where and that's why you're putting risk on the table. Okay, if you don't see that, yeah, then you don't put your risk on the table, but you're still trying to trade in that unknown. Okay, so that's our trade premise. You could easily, I think that's probably the same level. What candle's that? 12.55 to 12 whatever, 12.59. So it is that candle. So it's that low there. It's that low there. So you've traded through pretty much the same candle, I think. So really your confirmation, you've got this lower high in play. You've got this failure up here on the one, lower high on the one, below the Hulch HMA, the whole moving average on your one. You're not on your 20 and your 50, but essentially when you're trading outside in, you're going to be trading probably against your 20 and your 50s EMAs, I reckon, most of the time. On the one anyway. It's on the 5 as well. So you're against them on the 5, but you're extended on the 5. So that's the whole premise for the trade. Does that make sense? So there you've got your risk up here. You can lower it. You don't have to put it way up here at 720, 25. You can lower it because you figure if you're getting down here and it starts to reverse and you're wrong and you want as small a risk as you can. So about this stage, I think would have been the problems that I see that I could have had, because I'd be following it down on the one, and I could have been stopped out here just before it tipped over again, which is exactly what happened. I'll show you in a minute. Is what happened the other day. It took a few points out, but that's when it dropped 200 or so, and I just got squeezed out in that first little fluff. So that first reaction is when you're breaking down. That reaction, you're trying to anticipate, and you want to see the close above the hull, is what I'm trying to stick to now. And I'm trying to expect, okay, if I'm right on this, I've got to expect something. It's when it's the unknown. You get that breakdown. You get the buyers that might start to step in, and then more sellers go, well, if that starts to fail, I'm out. And as soon as it starts to fail and they start pressuring it, you get a slightly better exit on their longs, then they're the ones that are driving it lower. So you're going to get a bit of uncertainty. Is this move really? Is this a real move through the lows? Is this move going to continue, or are we going to get a bounce? You get that sort of, and then you're going to get some traders that will be happy to buy there for whatever reason. And then once that selling resumes, so what I'm trying to do now is didn't close on this green candle. So this green candle is closing below the hull. What I prefer to do is either leave my risk up here or put it at break even when I get enough buffer. This might have been a bit tough putting it at 680. If you got in at, say, 670, 75, you put it back at 675. You didn't get tagged. What was that high? 665. So might have been at one stage you're looking at it. But if you did put it at break even, say you got in at 75, you're back at 75 to make sure you don't lose. Accounting for the spreads on any CFDs, 70 would have been the level. Didn't tag that. No, didn't tag that. And I think you would have been okay. Or you would have been okay. But what you would have been looking for is this initial, it's closed at the hull, so it's still below. This is open, it's traded above it, but it's closed again below. So that's what I'm looking for. I want to see it close back above the hull, because then I think you start getting stuff like this. You start getting more of a complex correction, and any move that could have been on the cards is now off the cards. The extension moved down, and then basically we start to stall in here. We start to finish back above the hull. We start to get this kind of. It's going to mean that any sellers in here are going to now close because they've got it wrong, and it might lift. It might lift back up to the entry. So that's what I'd be looking for there. Okay, so you get that candle there, close down. Okay, if you can manage to stay in there, now your risk is here. All of a sudden it's lowered, or probably at the same level if you had it at your break even. But if you had your risk up here and you sat through these couple of green candles, then now your risk is at break even and you got a free trade. And then you got that expansion. Okay, you didn't see anything closing lower, closing lower, closing lower, closing all below, move down. Okay, again, at this stage, something like this. You've got that close back at the hull. the second candle closed above. You may have wanted to take something off here, or as soon as this one closed above, you give it a bit more room. You might have been stopped out at around 60, say, sorry, 70. That's 59, 570 as opposed to 670 up here. So still, you've made 100 points on that. And then you can see that action. As soon as it closes a pop of green candle above this hole, there seems to be 9 times out of 10, you got some sort of pullback in play, a bigger, not just your 1 minute pullback, but maybe a 5 minute pullback. So does that make sense there? Let's just quickly go. I'll see if I can get it. I want to see that other entry. So when we had this big sell-off, was it here last time we were talking? No, that's actually a long time ago. What was the date on Friday? 30, 29, 28, 28, 25. So it's probably this one here, was it? Was that what we were trading? Oh, yes, that was it. That was it. So I remember this kind of action here, and it was here. The move kicked off. I did short it in here and didn't get much further. So analyzing the 50, I mean, after everything we're talking about, you've got level up here. Don't know when it closed. Yeah, exactly. So I think it was when I popped up, I said I did take another short. So I think that short got me to about break even for the day. But, after all that work, leaving that on the table into that 3 o'clock, it was 2 o'clock close. It's frustrating. I mean, I wouldn't have held it through that hour, but maybe you've got something down here, you've got another 100 points. So let's just say you're up 50 for the day, which is, kind of good being able to do that. But it's just trying to go through that Deepak. Oh, he's got it muted. Beautiful. So any questions there, guys, just let me know. No problem. All right, so this is the action. I don't remember the trades, but I just remember this one that really gave me the urge. So if you mark it up and you start looking at it, you've got, obviously it's failing off this zone. I think the close was 5 o'clock close. If we mark that up here, it's this candle. If we just mark that, we'll get rid of, actually just move that one down. It's here. So that was the time, that was the actual level where it basically closed. So what you've got when the market opened at 11:15, which was here, was it here? That candle there. We pressed up and we're above the close. We're just flushing out. It's chopping around here, but what you can see, forget about this action here. That's the high of the day. We've come back down. We've retested, just like we did what we just talked about recently. We retested the close, the session close. We popped back up, but we failed. Instead of jamming up through it and continue on up, we started to fail up here. Okay, and this is where the MAs are down. Okay, so the action off the 5, you go, okay, we're not going to go up. What are we going to do? We're going to fail here. MAs are down. There's potential weakness coming to the market. I think I got caught on a short here when it retraced on me. Yeah, it happens. That was actually not too bad. Off that, you're below the hell, you're below the 20 and the 50 are down, you're below those, everything's working. It just didn't work out, to be honest. But the key thing I saw later on, which was this level holding in here. So once you can see that, I love those kind of things, and you can see that the market's popped up. It's got a little, this is a lower high on the 5. It's retested it, but finished it below. Retested again, so it's just flushed a few, but now it's gone down. So we've got this candle is probably the most important one, is we pressed up through, took it out. So any stops above there, potentially like myself, I don't think I took myself out earlier than that, but any stops that might have taken that break of this level through here, got short. Your stops naturally on the 5 is going to be above that, well, should be above that lower high. It's taken them out. If it hasn't the first time, it's probably taken them out on this candle, but then we started to head south. So it's important to notice on the Hang Seng when it doesn't, Yeah, no, you're right. It is hard to watch all the time, Jason. Um, so it's important to note on the hang seng, especially at levels. You got these lower highs, higher lows. When it finishes back below after flushing them out, it's a setup on the opposite side because you got to view that as a flush. Okay, so there's not really a level up here, but that was that initial failure again. Once we got the failure down here, so could have traded short on there, but we won't be talking about that one just yet. You could have traded short on that, but in essence, that was just on the 5. It's back below, finished below. It's traded through that low. After doing this, it's the same thing we just spoke about in the 5 minutes chart on the one that rallied. This one didn't kick on. Probably got stopped out here. Maybe still in. Who knows? But either way, that's probably more of a break-even trade than anything else. So back to this retest fail. You've got your lower high. That's all for me is a lower high. What do I just deleted here? That to me is a lower high area. Off here, you're pressing down. It's failing here. You've got failing at a lower level. You start to roll from there. Your 20s below the 50 was a cracking little entry here, and especially you probably see on the one preempting. You got that down candle, slightly inside candle. That for me was the entry. I think I traded short through there, stop above, and then kicked on to about here, which I'll show you why off the one. It was exactly what we've been talking about, not getting fluffed out, which, love to say it doesn't happen, but it does. So you can see if you just trade it pure off the 5, you really didn't come into pressure up until that close somewhere in here. Okay, so if you took it short, I think where I did around 60 something, 365, and you sort of stopped yourself at 82865. Is that right? 28565, 80 points thereabouts. I mean, you left a bit on the table, but you could have potentially got 100 points on just that move down, which is a cracker. So we'll go to actually, I'll just trade this. I'll see, I just want to change colors. And I'll put this as a 1. Make that a 1-minute chart. It's pretty easier to find. Bear with me. So I'll just go through this entry and then probably it's the way back, isn't it? There we go. Oh, slow down, boy. See, it's a bit jumping my computer a tad. All right, so that's your zone in there that we're just looking at. That's the same levels all marked up, and that's your lower high on the 5. If we just tighten it up a tad, you can see the lower high a lot clearer. And you can see using the 1, look at this entry here. It was actually, I had my stop above there, so I didn't have it right up there. So it's exactly what we're talking about. You've got action down here, and it's important. Okay, we flushed out that level. We sort of pushed down here, took out this low, and retraced. But the trend is still down on the 5. Okay, the 1 minute we had a little minor uptrend here, and we're starting to roll over. It's back, respecting the 5-minute chart, and you can see this chop around here, essentially where the market was going sideways. It really struggled to get back above, the whole here. It finished below, finished below, finished below, potentially finished at on this green candle, and the next one straight down. So I think I got short about that candle there. I was short there, sat through this. That's okay. Kept going down. If you wanted to wait a bit longer, you still had an entry on this red candle there, and your risk is a lot lower. I got short on that break of this low in here. Seen all those wicks, knowing that all your criteria is met. On the 1, you're below the hull. The 20 is below the 50. Momentum's down. The 5 is still down as well. Everything's starting to line up. And I think it was in here. Don't know. No, it was actually in here. I think I got fluffed out. So let's take that. Yeah, so it was in here. I got fluffed out. It closed up. I think I took it out here, the next candle, just when it headed down. And if I just waited like literally probably 20, 30 seconds, it would have been down on its low, maybe held through here. Stops, could have raised dropped my stop. locked in some profit, and then followed this down again. You can see that that one basically finished. Next candle was straight down, so you could have held it through there if you're sticking to the rules of it closing above, um, closing above that hull. Here it closed above, so if you're giving it, you want to see that close above and then break into new highs and give it a bit of room. It never got tagged, so you're just going to 50 or 55, 23,355 thereabouts, because by then, yeah, it's pretty much confirmed that it's going to go up. Okay, but instead it's just turned head south. Back at everything from here is below the that hull, closed at, down below, closed below, all these sorts of things. So it's closing below. It was up to about here, and these couple of candles, if you traded it purely from the one, you could have stopped yourself out somewhere in here, probably in that flick just before you got that next run down. But you were so close to the 1 o'clock close. Um, Fair enough exit. Does that make sense? Does that so if this is ideally what I'd be trying to do, and you see it didn't work out there. I got flushed out there, which is a bit of a bummer, and left 43 down to say there's at least 60 points, 70 points on the table there just by, I think, and this is the bad thing, and this is where psychology plays a big point, which people underestimate. It's so easy to say, "Oh, stick to my plan." It's one of the hardest things is to stick to your plan. So copying it in here, I think I had maybe one win, two losses. By then, to get my fourth trade short and having the psychology of just going, I just went back to break even. I'm frustrated. It's a crap day. And then you get out and watch it drop in your favor. So that's like I was saying, it's kind of hard. Yeah, well, that's exactly right. But the problem, I would love to do that. It's just trying to follow it. So it's just trying to remember that that's my plan. Okay, yeah, I could have had another loss. It could be my third loss, but it also could be a big trade like it was essentially. So it's trying to stick, get that mentality, you know, brush it aside, which is one of the hardest. And that's why paper trading is so different to live trading. Live trading, that's not a real loss. It's just rubbish. So you can easily ride that down. You can double up. You can do whatever you want. Um, but yeah, when you're live trading that, you've had a couple of losses and a win, and you're down for the day. It makes getting out, just getting back to break even, a lot more attractive. Does that make sense? So anyway, I thought it's worth just because Hang Seng's closed, not much is happening. Let's just see. SPY sideways. So I'm not trading SPY. I think I'm just going to call it a day, um, which is a shame to get in here off. Whether we get a rollover now, yeah, a lot, Jason. Occasionally you don't get a chance. You can just write it down, but um, there is a lot of times when generally consistency's there. But what I'm really trying to work on is getting those bigger trades and just trying to stick to it. And that's, like I said, it's easy knowing what you've got to do. It's another thing trying to implement that. All right, so I'm going to get a lower high in here. We're starting to hold below the hole, pretty much flatlining. That market's not showing any momentum either way at this stage. You can see that MACD's hovering around the zero line. Okay, don't expect too much. You want to see it break down in your first pullback. So if it can break down here and your first pullback holds under here, retest, then you can probably go short. I just think for now you could be stuck in a bit of a rangy action up until 3, 4 o'clock when the Europe opens. Lacking the lead of Hang Seng also. All right, let's. I'll just knock it on the head there. I think, like I said, it's good if you want to send through an email to or put up a chart of just, even if it's just to me. Um, Feel free to send it to me if you're happy to put it up in there and just question a few of the entries and exits and why, and get a second opinion. Put it up there. It's fine. So when Davin, I don't know if everyone knows Davin Clark, pro trader from years ago, what helped me the most was just marking up entries and exits. And sometimes it's not very nice because you put it up there and you might feel embarrassed, but generally we're all traders, we're all trying to learn. If you're a serious trader, you're not going to knock that in the head. Oh, sorry, Vin, I just realized I'll go through those shares. Yep. You're not going to, because everyone makes mistakes. If you're serious about it, you're not going to knock anyone for making mistakes. So when you put up stupid trades, nothing stupid. It's always good to talk about. So I'd happily put up entries, hear him talk about it, and listen to a second opinion from a guy that you know makes good money day in, day out trading intraday. He gets hammered occasionally too, but generally net, he was always making money and doing a good job of it. So hearing him talk about the entries and why, maybe you shouldn't have taken that, and here's why maybe you should have taken that. Oh, that was a good entry. You could have held it. Um, it's always good to hear. So if you want to do that, feel free to chuck them up there, mark them up, chuck them up, question the entry, always good. Question the exit, always good. If you don't want to, just send them across as an email to me. I'm happy with that as well. All right, we'll get on to Vin was just looking at, was it M7T? I've got here Linus bag of, oops, what happened here? Why is it not working? So this is the same old problem I'm having. I reckon I've got my, what's the name, set up wrong, my keyboard. It's just rubbish. I'm going to turn it off sometimes and turn it on. Here we go. M7T. It's up. It's looking all right, mate. Good volume. There's a few offers there, but it doesn't mean they can't get chewed through. The trend is up. Yeah, maybe you might find some problems up near these highs, just because it's looking a little bit overcooked on the upside, and the volume's coming down. You can see this volume from this move up. Good volume, weaker volume in here on the rally up into these highs, weaker volume. So maybe it's starting to stall up here. Who knows? But that trend, for me, if I was, if you're long from anywhere below 90, you can have your stop at 90. Because if it takes out that level off this double top, it takes out, say, 90, for instance, then you're probably going to go into pullback mode, something like this. You've got key double top in here. This is a bit different because you had a run up. You've got a correction here, a run back up. So when it fails off a correction like this, it fails again at that high. That's going to lead to a bigger pullback, which you can see. Pull back and then run. So it's probably a lot of that could be attributed to sell-off in Feb, March. But technically, that's what I'd be looking for. So and we've drawn this up many times. I'll draw it up again. Okay, so for anyone that doesn't know what I'm talking about, when you get, that's your leg up. Sorry, when you get it, here's your current anchor. When you get a pullback that doesn't break the anchor and then goes and fails off this high, you could easily go straight up through because it hasn't broken any anchor. So now that becomes the anchor and it could hold in here and rally. But when you get, that should move up. Let's just make that a bit smaller. What am I trying to do? Okay, this is it. So that should move up. Here's your current anchor when you're at this high. When you start to, break that anchor and then fail off these highs, that's a different story than failing off the highs here. It doesn't necessarily mean jumping short, because a lot of the time you get you short and it reverses on you because it hasn't broken any anchor. Here's a bit different. That there is more of a shorting opportunity, I would suggest, because you've broken this anchor in here. I'll draw that through there. You've broken that with that move down, so you've cleaned out a few. That's a double top as a big retest fail. So I'll be looking for that shoulder to sell into, and the expectations it's going to drive back down to this low. Here, if I'm looking at the anchor down here, and we had this failure off the top, I don't necessarily mean, and maybe you raised the anchor there, I don't necessarily think that's a shorting opportunity. It could just be a trap. So if you go and look at what we've done here, that correction down, essentially that's your high, you retested that high, that's your anchor. We've broken the anchor, traded back up, failed off those highs again. You can see the deeper correction. Now it's rallied again. So up here, if you've got your stop below 90 and we fail off this high, it doesn't necessarily mean it's short. It could contract, do a bit of this, inside action around 105, 110, and then lift again. Then all of a sudden you're gone from overbought down to oversold. We're holding at a higher level, and then it rallies back up through 120. So I think placing your stop there around 90 is pretty good. As long as you're above that. So you're bought below that. Does that make sense? So either way, that's a good uptrend. If you go to the weekly, it's not really showing much, is it? It's showing the uptrend on the weekly. And essentially that weekly high low too is back at the same level. It's a good level. All right. What was the last one? You take a look at ZLD. Off she goes. So that's a cracker. We'll just see if we can push up to basically the 9 cents. This one, if it gets a bit of a run, good volume come through, good volume. Previously had this run up. Okay volume at the time, but it backed off quite quick. This is good supportive volume. We try to get through these lows back down through 5, got soaked up pretty quickly, and that rally saw bigger volume come in, bigger volume, soaking up here, good volume. This move once it pulled back to 5.5, good volume started coming in on the lift, so it's getting ramped a bit. So there's more people getting interested on the upside, and then obviously today pushing through that high at 7, taking out this high as well, and all these highs basically 1, 2, 3 took them out. If you hold above here and close above this level, you're probably looking at an attack on 10 cents or thereabouts. So looking good, mate. All right, that's probably about all. I'll finish up there, finish talking. Guess you're sick of me talking by now. Hopefully tomorrow, I'm pretty sure, let me just check. I'm pretty sure the Hang Seng's going to be open Thursday, Friday. No, okay, so there's nothing on tomorrow as well. So the Hang Seng's closed again, which is not so bad because you've got some big numbers out tomorrow night in the US. So there may not be a lot of action anyway. So as long as I remember that, we can have another chat tomorrow if you're keen. Just let me know. Just chuck something in the chat. We can talk about some more entries. I'll find some more, go over some more. If you've got anything you want to have a look at, it's probably worth spending that time just chucking up in the chat, and we'll have a bit of a pick at it. See how we go. Anyways, thanks for joining me, and we'll see how we go. We can probably have another chat tomorrow if you feel like it. Just let me know. Um, Otherwise, enjoy your day, and we'll see what happens for the remainder of the day on the SPY. Probably nothing. Anyway, guys, enjoy. I'll speak to you again soon. Bye.